What's going on, Chris here, and we're going to talk about the markets really quick. So, as far as like government stimulus, there hasn't been a whole lot. I know uh, Christian Cinema and Joe Manchin, they just kind of been canceling each other out, and because of that, they are shy of the amount of votes they need to pass something, whether it comes down to stuff about oil or it's stuff about the loan forgiveness, student loan forgiveness. Nothing's really happening. Nothing's really being spent. The only thing that's been done is probably the sanctions. But as far as like the money that was spent to Ukraine, I think its impact on the market's done. If there was anything, I have no idea if there was. But as far as the central bank balance sheet, it doesn't look like it's been being reduced. Here's the line of their purchases of the balance sheet, and it's just flat. So Lael Brainerd said they're going to be doing some extreme reduction. We'll see, but right now it's flat. And then black swans, we have to wait and see. We can either get it from China, any like news from them with their zero COVID policy, or their market, or Germany if something happens with them. We're just kind of waiting and seeing on what happens, and also with Russia. And then as far as like with the euro USD the euro's been dropping and the dollar's been going up. So we expect to see that continue in some way. Right now, it's got a short squeeze going, and we're just kind of waiting it out and seeing what's the result. And as far as like the bond markets, the 10 and 2 inverted, and the rest of the inversions have disappeared. That doesn't mean the risk is gone. It means they're still thinking that a recession's coming in the future. It's just not right now. This front end of the curve is up and to the right, so that's healthy. This back tail of the end of the curve that the Fed can't control still believes that danger is going to come into the future. But as for the immediate future, it doesn't look like it's unhealthy. It looks like there's no immediate threat. And then as far as like the percent inversion, we've hit 13 or 14%. We're looking for 60%. So right now, it's not like a super big concern. And then credit spread alerts, we're at 1.6. And we were at 1.4, 1.5. We jumped back up. If we look at the 5-day, we came back up right there, and it widened. So it just looks like it's as far as like the trend, it looks choppy. As you can see, we've hit some gray bars, so there's a lot of chop, a lot of noise. Here, it does look like we're going to start trending down. We'll see, but it's still gray. But as long as we stay within here, anything can happen. And we're in that range. So, but if we were to complete this, the move index, we would pull it open really quick. The move index has to do with the bonds, and we want unique tickers. It's back elevated again, and it didn't close above last 2 weeks, the high of the last 2 weeks, but it's elevated, so it means that there's still fear in the bond markets. And then as far as like lumber to gold, it looks like gold is coming back alive. We'll see how it does. It's not definitive, but against lumber and against the market, it still hasn't proven itself. If we were to look at the commitment of traders report, it still looks like any kind of risk off time period. We haven't entered it just yet. So we would want to see something about like a long on the US dollar or a long on Japanese yen. And we haven't gotten that. So if this will load. But for the most part, we haven't seen that. And as far as like the Williams Money Flow Index, so this has to do with institutional traders. So this is the H4. For the short term, it does look like the institutions were long a little bit, and that makes sense for this pump. But for the long, bigger time frame, the institutions were last being bearish, and there was a divergence of price still going up here, and then the accumulators going down for that dump. So we'll see. It does look like it's within a narrow kind of range to where it doesn't have a whole lot of room to work with. I think I don't know. It could pop back up of this yellow line and then consolidate a little bit and then break down. That's something I could see. One thing I'm really watching is this weekly MACD to cross to the downside on the weekly 310.16. But we did get an overvalued weekly sign, and then we're looking for some more bearish institutional bias happening with the market being closed. We're waiting for more data, but it does look like it's testing the last week low, and you can see that right here. It does look like we're testing last week's low, and it could make for a good long opportunity for a test of this last week low and then a reclaim. So we're going to continue to watch it and see what happens this once it tests that last week low, and see if it comes up and then either gets rejected or what, or if this daily order block becomes a breaker. If this daily order block becomes a breaker, that would not be good. But we can't. We have to wait and see. It's too early. But as this commitment traders report, you can see that it's just long the British pound, no risk off edge here, or signal. As far as like the biggest thing is like, hey, we're bearish for the near term. It looks like it's going to go sideways. We're in the weekly chop range, and we're in the middle here of the sentiment. So it does look like it's going to try and close some market imbalances in the near term. As far as the cycles, this is kind of just what's got me waiting and just taking profits quick. Is this we're on our way up into a peak, into like the 16th, 17th, and 18th. So at the end of this week, 16th, 17th, and 18th. So it does look like by the start of next week or the end of this week, we should see some kind of formation or pattern forming. We're gonna watch closely what the institutions do and see if they go short. If they go short, it's gonna be something that we'll get aggressive on. But as far as like the overall context of price, we're currently testing the 72 and the 24 moving average. Let me see if that's correct. So this is the 24. So we're currently testing this 24 and the 72. It does look like the 72 wants to cross down and the 24 wants to cross up. That would be bullish, but we'll see. It does look like we could get some kind of test down here, a reclaim, and then retest up here at the 0.5 or the 0.382 or the monthly open for a lower high. We'll see. It looks like it's totally possible. But as far as like the moving averages, with it being so close to each other, if we get any further downside, it does look better for a long. If we get above these highs, it does look better for a short. So we're just kind of in that environment where it does look like we could, depending on where it's at in the range, could benefit us for a certain position. So we just went over just the bias of that the moving average is giving us. Right now we're in just this no man's land. If it goes a little bit below the last week low, it'll be a nice long. If we go a little bit above, according to the average daily range, if we go on the H4. If we get up here, it would be a nice short of 45.51. That would be a really good short up in here, or even just in the HDR around 45.30. But there is no guarantee that we can reach up that high. But it's something we could hope for a short position. But that's putting these two together, the average daily range, and so right now it's in between the ranges, and we're mostly at support. So according to that, we kind of want to look for longs for the big range. For this is the 2-year range. We're touching this 0.13. So this is supposed to be a fake out, and it's supposed to hold for support. If it doesn't, it's not good. So we got 18 days for that to really play out and see where it closes. On the daily, this is more of the 52-week range, and then we got another fake out support line, 0.382, and we want to see it hold there. So we got to see the close of the day. We got 18 hours, but that's what it's suggesting. If it doesn't hold here, this could be resistance and fake us out to the short side. So we need to really watch that. So we looked at the 2-year range and the 52-week range, and we got an idea that we're near the weekly low, last week low, and if we go a little bit under and we reclaim the last week low, it would be a really good entry for a long. And then as far as the RSI, if we look at the RSI over a long time period, we go to the SP500, it does look like it's better for a long. For the daily, it looks like it's in the middle, so it's like a week short. It looks like it would benefit a long, short-term long in the near term until these start getting over 68. So it does look like it would benefit short-term long bias if it reclaimed the last week low. And then as far as the trend efficiency, we're choppy. It's just poor trend efficiency. So something I'm going to do is just trade in small size and then take profits quickly. That's it. We're definitely not trending. And if we were to start trending, we would trend down really quickly. Volatility squeeze. If we were to look at the higher time frame, the best, the most accurate volatility squeeze that we can get is to the short side. So if we get the price line going down, it will, just like it squeezed to the upside, it gets squeezed to the downside. And this daily, right now, it's just kind of consolidating, but we'll see what happens. This weekly is the one to watch for the squeeze, because this squeeze right here created this huge movement here. So and here, this squeeze here pushed it even more. So right now we're just kind of look to see what happens during the week if we get this huge short squeeze or long squeeze. But on the smaller time frames, it does look like on the H12 that we could be coming into a squeeze soon. Also on the H4, it's about to pinch to the downside. So it's something we'll keep an eye on. But right now, it doesn't look like there's any squeezes. And then for the market structure break, we had an H4 market structure break on the SP500, and that's beneficial for the short side. We are in just this weird no man's land from here, the last week low of 44.50, all the way up to this breaker at 45.19, around thereabouts. So as soon as we get a bounce in either side, will give us a clue as to how to trade it. But basically, we want to sell when it comes up high, and we want to buy when it goes down low and reclaims on the opposite direction. So that's pretty much it for that. And for me, what I'm planning is to wait for that reclaim of the last week low, or um, 45.19. So that's kind of just what I'm waiting for. Um, we, if we continue on this current path, we'll definitely see the lows. It will do some kind of weekly. This is not the week. Some kind of weekly um, point of origin retest, return to point of origin, and you could see it very clearly here that it could come all the way down here. So that's kind of why I look at the weekly here. But totally looks possible. So, and that's kind of why I give you my point of view that I want to short if it pumps up, and then if it wants to go down, I want to buy, because like it's kind of just like what I'm thinking. It would make sense in terms of a risk to reward perspective. But on the week, you never know what's going to happen come Tuesday and Thursday with unemployment claims, and then also the CPI. But as far as like I guess the H4, the H4 money flow index, I'll be watching that closely. Whenever it starts to go short, I'm definitely going to go short. Since it's long, I'm not going to touch it. I'm not going to be long right now. I'm just going to wait for it to be really appealing to go long, or to go short, or even to go long. So how would I do that? Is maybe an H1 market structure break. So this is on the H4, go to the H1. So we're just waiting. It does look like there's a gap to fill here. So I'm just waiting for some kind of, I guess, order block to form here, and then reclaim. So it could come all the way down here, London open, come back up, New York open, shoot up here. That's just what is possible. Fill this gap. Maybe that's it from there. Maybe it comes up to here and then it gets shut down. So we'll see. It's something that we gotta wait and see. So that's pretty much it. Thanks for watching.